All right, guys, welcome back for another update to the Bitcoin Trading Journal series. If you've been following the markets at all, you probably know that Bitcoin's been selling off for the last few days in a pretty dramatic and volatile fashion. Um, Now, if you've been following my Trading Journal series, you probably knew I had a long entry from 38,500 and invalidation at 37,161, this monthly low on Coinbase right here. And you can see pretty obviously that, that was a pretty clear invalidation level. Price hit that level and then expanded pretty aggressively to the downside. Good place to have a stop loss order. Now you might be asking, if I knew this was such a good level, why didn't I just flip short at this level and ride it down? Well, just because your invalidation is hit doesn't necessarily mean that there's a good entry to be had, at least on the time frame, this daily time frame or the time frame I was looking at. Now you could go down to a lower time frame and find a series of good entries, which we can actually do that now. And this is a good illustration of the idea that there are certain times in the market where it's beneficial to be playing closer to the market. And what I mean by that is playing closer to the nearest price distinction that's closest to price. And one of those times is when volatility is expanding really rapidly. And that may seem counterintuitive. You might be thinking, well, why would I play close to price if volatility is expanding? Well, it's expanding in one direction, right? And it's going through a series of price extensions and price fills that ultimately lead in that direction. So the volatility is expressed in one direction in situations like this. So we can go through here, we can see the series of price extension, get a price extension fill, and then price kind of consolidates for a little bit. Then you get a price extension fill, comes down here, price extension fill. This time here comes back into the range, but then you get the same pattern right here, price extension fill. Same pattern right here, price extension fill. This is a pattern that's just constantly playing out, even on the micro time frames, right? You get these micro extension, fill, extension, fill, extension, fill. You got one here as well. Didn't barely hit it, but you could even document this one as one. Now you might be asking, why am I in a long position right here? Well, the rationale for that, I did play a few of these short positions here, but to be completely honest with you, not as many as I should have. Um, Number one, because it's Mother's Day, but number two, I think my bullish bias kind of limited me from taking full advantage of those opportunities. But now that we're at this, the reason why I'm in a long position here is based on this level right here, right? So you have this multi-month consolidation from summer of last year with the capitulation here, and then you set in a Wyckoff pattern, right? Liquidity ran to the upside, then liquidity ran to the downside. You get this Wyckoff Wyckoff formation, and then a spring, and then so you want to mark off this daily trading range here, right? It comes in at 31,000 on Coinbase. So this is significant because this is the daily candle that led to the spring that ultimately set in the bottom for the price move. They put in the bottom at 29,000 and led all the way up to the high at 69,000 ultimately. So what this area represents is the area where, the huge bids were packed into this daily candle right here, right? Massive bids that really drove the market up. So and we haven't tested this level since price left it. So there's a high likelihood that price will respond at this level and produce an actionable response. We would still want to see that on the lower time frames, right? Have some type of low time frame swing setup based off that, which I think we're currently seeing now. It might be a little early, but if we go onto the right side of the chart, you can kind of see that. And I've already found an entry based off that idea. So if I go to a 1 minute time frame, you can see here we had that level marked off, and ultimately price comes into that level, reacts off it, and then it's kind of retracing into this area right here. So I'm kind of looking at this as a area of opportunity. I have my position right there. I just entered a position based off this idea. And so I would set a stop at 30,300. So let me do that real quick. Let's see. Set in 69 lots at 39,000, or excuse me, 30,300, not 39,000. Stop right there. Again, the idea behind that is that, price has expanded so volatile, and it extended into that significant level, right? That order block that set in the prior macro swing, that the fundamental basis of this trade is kind of betting that, price will react off that level, right? And it's not necessarily predicting that a bottom will be set in at the market here, but it's just predicting that, price will react off the level and maybe, fill in some of the inefficiency that was created leading down to it. Again, it's no guarantee. There's, price could just really start capitulating. There's really no guarantee in that regard. But to me, it seems like an obvious and easy setup, easy to manage risk. And hope you guys like this video, and I'll be uploading more soon. If you like this type of content, just make sure to like the video, subscribe to the channel, and I'll catch you guys in the next one.